Welcome everyone. So now we are going to reach at the final, almost final step to complete our published financial statement. Okay, so the most challenging part and the most marks you can collect from your treatment. Alright, so the next step after you completed by having the draft, the format and you posting the item in balance into the template or your format. So next step is you are going to have additional information adjustment. Additional information, as we know, is a new transaction which you need to record and appear and stated in your financial statement, because we're not going to go through the accounting cycle since we are needed to provide our financial statement, so we skip that part. Yeah. All right, so the first additional information is about depreciation on the equipment. Property payment is provided for the building is 5% on cost. So how are we going to do this? So we'll go to the building. Yeah, 5% on cost will be how much? If it is 10%, if 1,200, if 10% is 600, will be 600. So depreciation charge for the building this current year will be 600 because it's 5% on cost. The cost is 12,000. Alright, so the 5% actually is 600. So you are going to record in your notes of PPE, mean you have to add to your accumulated, mean you credit. So you debit one. So you are going to debit expenses charge in the financial, in the working, under the name of depreciation for the building. We are going to put it classify under administrative expenses by 600. So this means once you already credit here, okay, so you must debit here, complete your double entry. So debit. Okay, so you debit here. Okay, done. Complete one transaction. Alright, so next is motor vehicle 10%, and this motor vehicle must be classified under selling and distribution expenses. Alright, 10% on cost. Fine. We go to the motor vehicle. So the motor vehicle, which is 6,620, will be charged 10%, so it will be 662. Alright, so again, the depreciation charge will increase your accumulated depreciation credits. So we must debit depreciation for the motor vehicle for 662 under selling and distribution, because it stated clearly we want it to be classified under selling and distribution. Fine, credit debit. Alright, so the next depreciation will be 10% on carrying value for the office furniture. Carrying value for office furniture means you have to deduct first 6480 minus 1680, then you multiply with the 10%. So how much? This 80 is gone. 64 minus 80 will be 48, right? So 48, yeah. So 48,000. Oh no, 4,800 for a 10% will be 480. So the charging will be 480. Again, the same process. It must be increased your accumulated depreciation. So credit. Next, you have to debit depreciation charge for the year, and we are going to classify under administrative expenses as one of the expenses, right? For 480. Yeah. So debit. Alright, so done with additional information. The next one is another additional information. It's about the provision for director remuneration. What is provision mean? This is new transaction that haven't been recorded, and one of the main reason because it's not being recorded because it's not being paid. So provision means the expenses incurred but no payment yet. Somehow is similar, or is actually same thing goes with the accrued expenses. So what do we need to do here? So you are going to charge as your administrative expenses under the name of director remuneration. So you are going to have director remuneration. Yeah, under classify under administrative expenses by 650. Okay, if it is 650, you must debit because it's expenses, right? Then your credit will be accrued expenses classified under your current liability. So this is director remuneration accrued. Simple one. Right, final figure please. Which is 650. You must credit. Alright, so here is debit, here is the credit. Alright, so next you have transfer of 290,000. Yeah, transfer of 290,000 to the retained profit. No, from retained profit to general reserve. This one is very easy one. Yeah, what you need to do, go to the statement of changes. You are going to do the transfer. So you are going to put here transfer. Slot in. Transfer. Transfer from retained to GR. So retained you must minus by 290. Yeah, transfer if it is minus from retained profit credit balance minus mean you have to debit. Then you credit what? General reserve. Post to the general reserve. Transfer to general 290. Mean you increase general reserve, you credit. So complete already your double entry. Alright, so next you have dividend declared. Yeah, so dividend declare normally at the end of the day the company will declare the dividend. Mean the company agree to pay, but once declaration makes it takes some process to pay. So declaration only can be recognized as a liability. Mean you have an obligation to pay, but the payment is yet to be taken afterwards, right? So the board of directors is final dividend of 5% of ordinary share. So mean the director or the company willingly to give dividend another 5% to ordinary share. So most of the time the dividend is paid based on the how much actually the amount of your ordinary share, which is 14,700. Yeah, so 5% from the 14,700 will be okay, so I'm going to move the closing balance here. Okay, I'm going to moving a little deep down here, so I have enough space for the proposed dividend. Yeah, so proposed dividend. Cool. So 5% from the 14,700 will be how much? 7. Okay, 5%. If it is 10%, will be 170. 170 kita bagi 2, 735. 735. 735. Am I right? So this is 5%. Yeah. Okay, 40. Yeah, 375. Okay. So for the dividend, actually it will utilize the profit, reduce the profit. This is the debit. 5% from the addition. You must remember dividend, even though we pay to the shareholder, but we don't share to the shareholder, we are going to utilize the profit. So reduce your profit debit. So credit, since no payment made yet, but there's an obligation, so you're going to classify as a current liability under the name of proposed dividend. Proposed dividend for the ordinary share by you can finalize straight away the figure, which is 735. Alright. So next you have proposed dividend for preference share. Okay, as we know, preference share actually the dividend is fixed 8% by 980, but 9,800. Yeah, so 9,800 is a fixed dividend. Mean we are going to pay only 8%. So 8% for 9,800, how much? 8%. Oh, I don't have the calculator with me. Never mind. We can calculate manually. Alright. So how do you calculate manually? 8%. 8% is 0.08 multiply with the 980. So 980. So we just take 980. Alright. So this one 0, 8, 4, 6, 9 plus 8, 72, 78. Okay, 78. Gone this one 1, 2, 3, 78.4. 78,400. Alright, so 78,400. As you can see, 78,000. Oh, sorry. It's not 900, it's 9,800. So here, alright, so we have 2 zeros. So total dividend we pay actually 784. So 784, you have to compare the interim, because the interim is stated that this is already paid. Yeah, 380. So if this 784, they already paid by 380. Yeah, this 380 under preference dividend. Therefore, yeah, the remaining balance will be 404. 404. So another 404, please. So because it is a fixed rate. So now we have proposed dividend. This one for ordinary shares. This one is for preference share charged under profit or loss, but another 404 will be another debit. And then because it's obligation to pay, so you must credit. Yeah, so this is a preference share to 404. Yeah. Yeah, so you must credit because it's becoming obligation or your current liability. Okay. So next, what do we have? Alright, so this part of the interest of loan was still unpaid, saying that we have loan. Okay, fine. So the interest that we have to pay is 2,700. The interest per year will be 7%. Okay, now I don't have the calculator. We are going to calculate manually. I love maths. 2,700 multiplied by 7 with the 2 decimal places, 0, 0, 7, 5, 9, 4, 2, 7, 14, 18. So 201 to 189. Alright, so we are going to compare how much actually 175. Alright, so total interest should be 189. Therefore, we have another 14 actually. In order to make it 189, we calculated already. So we lacking from the financial statement. We still lack of how much? Therefore, our interest should be 189. Which is 14,000 more, right? So 14,000 more means you have to increase. Yeah, increase your finance cost or part of the interest. So mean you have to debit more because it's debit balance. So remember your double entry you have to credit because this is not paid yet. So you have to classify under your current liability. Okay. So your current liability under the name of interest payable. Okay, this payable will be 14,000 actually. Credit. So complete your double entry. Alright, fine. Alright, so next what do we have? Okay, next we have investment income not yet received 97,000. This is actually investment income accrued. So investment income accrued, if you receive, you're going to debit the bank. If you don't receive, yet to be received, it's going to be still your current asset, just that it's not bank. So you're going to call it, classify or term it, return it under the name of investment income accrued. Alright. If it is expenses, accrued expenses, it becoming your current liability. If it is income, it's becoming your current asset. Just vice versa, opposite effect. Yeah. So the investment income accrued will be 97. Alright, the 97. So it must be debit because it's current asset. Okay, once you debit, you must credit. So the credit will be the investment income itself. Here we have investment income. Maybe we have to add some more by 97. Right, credit because this actually must be recorded as your the investment income or revenue you earn for the year, just that you don't haven't received yet. So you're going to record as your investment income as well. Alright, so next you have the current tax estimated 710,000. So this one actually, we can assume this is your final figure given by the inland revenue. So you're going to finalize your tax actually 710,000. Okay, so 710,000. So you are going to give final figure 710,000 as your part of your expenses charge for the year, which is must be debit because it is your expense. But how are we going to double enter? It's going to look at the what do we have? You have 497 actually. This one you pay, but final your tax charge agreed declared by the inland revenue is 710. Therefore, you still this is underpay actually. So you're underpay by how much? So we need the 3 to become 500. Alright, so 500. So we play plus 2. Right. Alright, so 500 we need to 52. Okay, 597, 710 minus. Okay. Alright, 710 minus 5497. Alright, so I have 3 here. This one 90. This one becoming 0. This one we have pinjam, so 99 is 0. So this one 7 minus 4, 303. So you have 303. You need another 303. Yeah, so 4 minus 3 is 7. 9 will be 9. 3. Alright, so 3. You need to have another 303, or you still owe to the inland revenue by 303 because you pay only by 497. So you have to recognize extra charge for your taxation. So you have to debit then this credit because you owe to the inland revenue. So becoming your current liability in the name of tax payable. Alright, done. Yeah, 303, it must be credit. Yeah, because that one is debit. This one is debit, so we are going to credit. So now it's already completed almost all the treatment needed. Yeah, so what you need to do is just simply finalize. Yeah? Remember, you need to finalize your selling distribution, post to the selling distribution. Finalize your admin, post to the admin. Alright? Oh, sorry. I think the finance cost here, because since we already have the space, you should put it here. Yeah, I have forgotten. Yeah, so you have to add some more of 14. Okay, so the total should be here. Yeah, alright. So note the detail here because already provide the column here. Sorry. Okay, but we know this is going to be 189. 189. So we already post here. Alright. So now since there is no changes in the cost of sale, so the first thing we need to do is to finalize how much you selling distribution. So 1,200 plus 662 will be 1862, right? Okay, 1862. You are going to post to the selling distribution 1862, and this is your selling distribution expenses. So it become your expenses. Okay, what about your admin? So your admin ialah 1,600, 1,700, 1,700, 2,300, 2,007 AO, 2,008 AO, 2,007 AO, yeah, plus 650. So will be 031 841 34307. So 34307. Aha. Okay. So it must be debit. So post this figure to the administrative expenses, right? 34307. Yeah, you must minus because you're going to reduce your equity, and then part of your expenses for the year. So once you complete already, you post the finance cost as well actually. So you have it here. So mean you have to minus. So now you are going to complete your statement of profit or loss. So here there's no changes in the cost. So you have 8,800, which means it's a debit balance. So if it is debit, means it's reduce your profit. So you have to deduct. So in order to calculate the gross profit. Alright. So then once you complete this one, you add to other revenue. So no, we have none add to the revenue. So you're going to find your profit from operation. And then you add to your investment income. So how much is your investment income? If you add to 97. So if it is 97, alright, so you have 0.5 here, see here, 7, 9 plus 2, 12, 2 to 7.5, which is you have to credit because your revenue, so you increase your profit for the year. Okay. This is the working. Alright. Alright, then you are going to calculate your profit after tax afterwards, right? So, okay. So we have 16,116.5 minus 8,800. Okay, this is 0.561315 minus 8 will be 7. So here we have gross profit will be 7316.5. Debit balance, right? Because credit balance, because credit greater than debit, which means your gross profit. So gross profit 7316.5. You have to minus 1862, then minus another 34307. Okay, all right. So here is 0.5. Yeah, 6 minus 2, 4, 4 minus 7, 7. 4 minus 7, so this one becomes 0, 0 minus 4, 4 minus, oh, so this is 4. Alright, so now this is 133, 3 minus 13 minus 8, 5, 13 minus 8, 5, 5 minus 3, 2. So, alright, then we have 6, 6 minus 1, 4, 4, 4 minus 3, 34,000. Sure, administrative expense is 34,000. Oh, right. I think I got it wrong here. 1,600, 1,707 plus 600 will be 2,307. Yeah, plus 480 will be 2,787. Yeah, plus 650 will be 731 814 Sorry, 3437. Yeah, it's not 34307. 337. Alright, so 237. So we're going to reduce. Alright, so here you have 7316.5 minus 1862 minus 3437. Yeah, so you have to minus this one. Okay. So here become 5, 6 minus 2, 4 is 4, 14 minus it becomes 7. So this one you already borrow just now, right? 6 minus 2, 6 minus, okay. Borrows become 10, so 10 minus 6, 10 minus 6, 4, 4 minus 3, 4 minus 3, 1. So this one you borrow 1, so it become 2, 2, 12 minus 4, 4 minus 4, 0. And this one you borrow, so it becomes 6, 6 minus 4 is 2, 2017.5, right? So we have 2017.5, which is the credit balance, because credit is greater than debit, known as a profit proportion. So what you need to do is you are going to add to the investment income minus your finance cost. Alright, 2017.5. I think the easiest part is we already have the answer with me. Alright, so never mind, I'm going to complete it by myself. Alright, so 207.5 plus 207.5 plus first 227.5. So I have here 0, 5, 302, 2035.5, 2035.0 minus 189. Alright, so 15 minus 10 will be 6, 12 will be 4, this one 9 minus 1, 9 minus 1, 9 minus 1 will be 8. So 846. So we are going to have 846 profit before tax. 846. Alright, so 846, which is credit balance, minus with 7 and 10 to get the net profit. So this one becomes 6, 4 minus 1 is 3, 8 minus 7 is 1, 136 is your profit after tax. So this profit after tax, since you don't have any other commercial income, just leave it there. So this one need to be posted to the retained profit in your statement of changes in equity under the name of profit after tax. Profit after tax, so post the 136 to the profit after tax in the statement of changes, becoming 136 is the credit balance may increase, so you have to increase. Yeah. So once you're done, so why not you have to complete your statement of changes in equity, where the owner share, actually the closing balance is nothing changes, you stick to the same as the opening balance. And then you have 9,800 is your preference share, and then you have general reserve, now it's increased because there is some transfer, so 5, 8, 1, 8 plus 2, 0, 1, so 3085, and then you have retained profit. Alright, so retained profit 8,500, so will be 8636 minus 290. Alright, 6, 13, so this one's 4, this one 5, 3, this one 8. Alright, so minus 670, minus 670. So this one 6, 14, this one 7, this one 12, 4, 12, 4, this one is 7, 7.6 minus 380. Going to be forever. Alright, so you are going to complete the figure here. So once you're done, you are going to find how much is the preference share and how much is the reserve. So the preference share and the reserve will be the share capital and the reserve total will be posted to the share capital here. Alright, so once you're done, you are going to complete the freehold land. So the freehold land, you have to complete the opening balance and closing balance, as there's no changes. which is 11,700. There's no depreciation charge, so it's 0. Therefore, you have carrying value is 11,700 plus minus their closing balance, so it stick to the 11,700 carrying value. Whereas building, you have 12,000, no changes from beginning and closing. For the accumulated depreciation, you have 1350. So 12,000 minus 1350 will be, this one will be 650. All right, 12 minus 1 will be 11, so it's 10. All right, so now 6,620 minus total of your accumulated depreciation. Now we have 1962. Yeah, so 1962 minus 6,620, so 0 minus 2 will be 8. All right, so this one is 11. 11 minus 6 will be 5. Okay, so this one will be 6. 6 minus 6, 60 minus 9 will be 7. And this one become 5. 5 minus will be 4, 7, 5, 8. So, you're going to complete your office furniture as well. So, get it. Total accumulated depreciation. Oh, here you have to complete your closing balance as well. 6,620. Alright, so the closing balance, no changes. 6,480. All of them must be debit balance. So, next you complete your accumulated depreciation. Alright, so this one 60. Alright, so 1, 7 plus 4 is 11. 1 is 2160. 2160 must be credit. So you have to match the total cost of valuation with the closing balance and also accumulated depreciation closing balance. Alright, so here 6180, which one you are going to have 20. Yeah, so 80 minus 60 is 80. So 64 minus 21 will be 53. 5,320. Okay. Alright, so that. So what you need to do is you are going to have total of your PPE, put it here. Okay, once you're done, paper of PPE, put it here. And then you have to intangible asset, nothing. So there's no changes in investment. You just post 5,280. And then your receivable is 663. No changes in the allowance for impairment, fine, leave it blank. And then you have 505. Then you have 246. So post to the final column. And do you know this is all must be debit to get your total asset. Alright, so now share capital, we already have the figure from here. I want you to calculate by yourself, so I'm not going to show it to you. And then your total in order to get them. Inshallah, we balance. You'll see. Thank you.